Welcome to the Foundation for the Study of Cycles. My name is Lars Fontin and welcome to our weekly Cycles TV series. As once a week we meet here to discuss some cycle analysis on current market data. So what I have prepared for today is I want to discuss a new concept or idea applying cycle analysis to markets with volume cycles. That's the key topic for today's session. So this is the one and only topic. I will introduce this concept of volume cycles on the ES-Mini futures for today. This is a pre-recorded session, so feel free to drop in some comments and questions down below. I will review these sections while I will not be able to answer the live chat today. Volume cycles. This was requested in our poll we did 2 weeks ago. So you also requested to have some additional ideas like using cycles and volume. And therefore today is the place to show it to you. What are volume cycles? So we normally, as we deal with cycle analysis, we deal with cycles on our time axis. So the cycle length, which is detected, is measured in the time domain. So either daily, weekly, hourly, or whatever is your time frame you have been analyzing cycles in the data set. This is the most common used a time frame to analyze data. But today, let's switch away from the time domain, because if it comes to markets, there's not only the time, there's also another charting domain we can use, which is volume. So we need to think about the concept of charting the market action based on volume action and not time. So if you heard this concept for the first time, this is not completely new, but we are dealing with volume charts instead of time-based charts. So that's the first purpose here. And just to bring in, sorry for playing the intro again, to bring in here this information, this is now charting the main market action in terms of traded volume per bar or per data point. So instead of each minute, each hour, or each day plotting a point or bar on our chart, we now switch to plotting a bar at each amount of traded volume we get a new bar. And we just define the amount of volume we want to squeeze into one data point. So for example, if 10,000 contracts are traded or 10,000 euros in regards to volume have been traded, then we make a stamp of this concrete action, and then we continue once the next 10K in volume has been traded. So, and this might be non-linear in regards to the time domain. So, but we keep it linear in the way the amount of traded volume. So therefore we can detect a different kind of cycles. So, I would refer to make yourself comfortable about volume charts. This is a well-known concept. And here I have pulled up the volume for the E-Mini contract of the ES futures based on a 10K volume per bar. So let's have a closer look at this chart, because I want to bring across some of these information points here. First of all, it looks, so this is the price action, by the way, this morning. So we have Monday morning today, 18th. So I recorded this 1 week in advance, but that's today. And we have Friday, Thursday, so the last days here right on the chart in our cycle scanner, by the way. So we can do this with a cycle scanner. However, you see here down below that we have the time axis here, but if you look closely, this time axis is not linear. So for example, here you see the time from 12 o'clock here up to 4 o'clock in the afternoon, which is the same distance here than from 16 to 18 o'clock, which is just 2 hours. So, and then we have another 4 hours from 18 to 9 o'clock in the evening. So you see, this is the reason, because we get once new data point when the amount of 10,000 volume has been traded in the E-Mini. So this can be the reason in every 4 minutes or 5 minutes, this is the case here, we have completed the next trade of the volume amount we are looking into. Or this can take, maybe here in another time area, this can also take 15 minutes until this volume has been traded. So therefore, we got a new data point on the linear traded volume domain, while still we see it plotted here on the time domain. So we know when this amount of volume has been finished in trading. So therefore it's still time stamped here on our axis. But we need to understand the concept here that it's now charted based on if 10,000 K in volume have been finished in trading, we got a new data point. So this is important because now we apply our cycle analysis technique to this volume chart and not time-based chart. That's important first to understand, because it quite looks like a basic chart. So we now can apply the cycle engine to get a clue on what volume cycles are active in this data series. And this is very interesting because this gives us another view on not time-based cycles, on cycles based on traded volume. I think the concept of traded volume is interesting because you always have a kind of fixed amount of participants in these markets, which can go either long or short in the markets. And the amount of participants does not jump abruptly during one day to the other. So you have more or less a fixed amount of available volume in these markets. And like emotions, like temperature, this volume will change in cycles. You will not see abrupt changes from all traders going long or short, or all participants switching positions in the extreme. So they will change the way how volume is long or short, also based on cycles. However, we don't measure it in the time domain, so we can measure it at the point when a certain amount of volume has been traded. This could be completely different in the time domain. So we are looking at a complete different concept of tracking and analyzing cycles, and therefore the market is a perfect example where we can use this or try this concept to monitor, right? So then we apply the same procedure. So we look for the peaks in the spectrum and then can do projection based on volume cycles. But in order to monitor that, I will go back in time to get a clue how this would have worked in the past. So therefore, let's go back somewhere here. Let's zoom in here and choose a point in time in the past, somewhere here. Maybe here at this point, let's update the cycle analysis so that our analysis now ends at the 8th of October, 4 o'clock in the afternoon. I mean, it's at least here European Standard Time. And then the light blue data is not known by the cycle analysis here. So now let's look up what the cycle scanner provides us here. So first, a basic look at the spectrum. So we're looking for the peak now, again, in the spectrum. And as I try to teach all the time, so we use the standard procedure. We don't use any black box in selecting the cycles. We try to identify the 1 to 3 most important peaks in the spectrum and build a composite cycle based on these 3 peaks. So we have one peak here, 192. The cycle length now is not measured in time. So the length here, so therefore we don't provide an measurement because it depends on the input data. In this case, one point in time represents 10K traded volume. So you need to multiply the 292 with 10K, and then you get the cycle. When this amount has been traded, this cycle is finished. We have a second one here with a length of 355. And the third to pick here is this one, which stands out in the spectrum with a length of 139. 10K volume traded. So we can see this here also again in the list of the spectrum scanner chart. And first, to explain the measurement, let's start with the long-term cycle, which is now highlighted here. Let's make this cycle a little bit larger. And now let's first have a look at the past of this cycle here. So, and as we can see, it looks like there's a clear rhythm in the market based on traded volume. So that's a very interesting picture we see here, right? So you see here at this point, which is a cycle top based on traded volume, at this point in time, then we have a projection that at this point in time here, when the amount of volume has been traded, there is a low. Yeah, so we can apply this to this here. So then the next top projection based on traded volume has been here, which is then in the market here. So it goes from here to here. And then the next projection of this static cycle would expect a market low based on the traded volume here, which is exactly in alignment with the cycle projection. And I mean, you know how it goes. This is the top then in the real markets. And then the next low was traded here. So the next low here. So we see, we can confirm that this volume cycle is visible in the data series in the past. And it's a very clear cycle you see here from a longer term perspective, which is visible here. So that's interesting because you now have another measurement in addition to time. So now you can start to combine the cyclic approaches if you have a clue in regards to when the amount of traded volume has been reached. We can expect a change in trend in the market based on traded volume cycles. So let's now look into the future here. So I mean, this is today, or this is the point we are looking at here, because this is the data we have. So we arrived here at this cycle projection right in time. So the current reading, yeah, of this cycle analysis here, because the light blue is not known here, would be that at this point in time here, and don't compare it now, it's not a time projection. This is a projection, so this is where we are. From here to here is a projection in expected traded volume, and then you could expect a low in the market based on traded volume completed. And what happened in the market? And this is now the out of sample situation. I just picked it here. It's right on time. Exactly as predicted, the finished volume cycle has led to a market low in the market as it did in the past based on this dominant cycle. I mean, now it comes into play, you should update the volume cycle analysis. So you should not treat it as a static projection very long into the future, but that's just the very simplest way of using volume cycles. We can now add the composite based on the 3 cycles we have seen in the spectrum here. So this was just to a little bit simplify how to read it. So let's also add the other 2 cycles, which have been really stand out in the spectrum, which has been the lengths here with the 139, 10K traded volume, and the 292 10K traded volume. Always be careful, it's not time-based. So now we have the composite based on these 3 cycles here on the data. You can see then how this aligns to the past series. You see that also with the correlation score, we have a correlation score above 0.5, which means we have a positive correlation between these 3 volume cycles and at least the past weeks of trading data. So there seems to be a correlation between the change of volume at these given cycles, which correspond or which correlate to a change in trend in main price of the underlying asset here. So when we now do our forward projection here, so and you know that when the dark blue changes to the light blue, that everything here on the right hand side is not known by the cycle analyzer. We're just looking always to the next 1 or 2 turns in the future of this composite, yeah? And I mean, I showcased you the longer term already, but the projection would be, okay, at this point in time, we would expect the low at this point in time here, which, I mean, if we just count it this way, would be here. So we would have seen this situation. And then once this low is in, we would expect a market top at this point in time here. So this was then the uptrend here at this exact top. Then this low here, and don't count the amplitude as a projection here. We count the, here not time, it's the amount of traded volume. Once this volume has been traded, again, we would expect a low in the market here. And I mean, even if I would not use more than 2 or 3 changes here in the composite forecast, even then the next high was expected somewhere here. So this is the low, and then we had the next low here. So you see, just from using the main projected composite changes in trend here, which I just highlighted, that the traded volume cycles have been very, very useful in projecting future turning points based on closed traded volume in the E-Mini futures. And I mean, you can scale this concept to daily, weekly, or intraday, whatever. It doesn't matter. It's the same concept. And you see here, I mean, it's this week of trading. So I just loaded the last week of the E-Mini futures and showcased this is my data which I have today. So I've not gone somewhere into the past to cherry pick some examples which would have worked. I just loaded last week of data. I picked the 3 main cycles which stand out in the spectrum. This is the procedure which I always teach here. And this would have been the outcome if we would have applied this procedure here on the trading day of the 9th of October. And then we had a forecast for 3 days, looking into the future, or not a forecast from a timing perspective, but you can calculate this from this point in time here about when this traded volume is closed, when this traded volume is closed. So it needs a little amount where you need to recalculate because you don't have a time projection into the future. Even if this axis here suggests that you get a timing projection, it's not. You get a projection in regards to finished volume. Yeah, so you need to monitor the traded volume because you know the amount which needs to be traded once you have made your forecast here. And once this volume has been closed, which is the first one or this one here, you would expect if we reach this point in volume, we could expect a change to the uptrend here based on the market participants, right? And then the next up point here is then you have another amount of volume which needs to be traded until you reach the next point where the trend is expected to change on the top here in the market. So then you have more or less a roadmap based on volume cycles, which you can, for example, this is a trading procedure once a morning. Yeah, you prepare the amount of volume which you expect to be finished before a trend and change might be expected. So then you can monitor the traded volume, for example, in your daily procedure, and then you can switch to the time-based cycles. And if you see now alignment on time-based cycles with traded volume and volume cycles, there you have it. That's the concept of cycles within cycles of completely different data sets. So I mean, we are looking at here the E-Mini futures, but now you combine 2 cycles, volume cycles and time-based cycles. If they fit in regards to the same change and trend expected at a given point in time, and if you monitor that at this given point in time based on time-based cycles, you see that this amount of volume has been finished, and you know based on the volume cycles, this is also a major a cycle based on volume, then you get more and more confirmation and confidence in applying the cycle analysis into market analysis and your trading. Right, so that's the point for today I wanted to make. As it was requested, we use it, or I use it very extensively to also spot cycles in traded volume. For sure, you need to prepare your own data to being able to do this. So what I did here is I exported the volume chart from my main charting application and then imported here this data set as a comma-separated value file into the cycle scanner. And once you have downloaded the volume charting data from your favorite charting application, then it's the same procedure here in our cycle scanner. So there's no change in that, and you can reuse it right away as I did here. So there's some manual preparation required. You need to have the data, so you need to have tick-based data that can be then converted in volume data points to chart it like this or to do cycle analysis like this. But if you are in this market, you will know how to get volume-based chart data, and the Cycles platform is already able to deal with that. And therefore, just the measurement is not length, it's the measurement of traded volume. So therefore, I hope you see that our cycle analysis platform is more or less not only prepared to do time-based cycles. So that's why we don't provide the measurement days or hours or whatever in the cycle measurement, not in the scanner and not in this list here, because the length depends on the input data you throw into the scanner. And what input data you put in is your responsibility. So this is not limited to time-based cycle analysis. The length you see here depends on the input series. So I hope maybe this opens your mind. If you've not seen this kind of volume cycles, maybe this opens your mind to also think a little bit around the corner. There are not only cycles in time, there are also cycles in traded volume. And maybe you find a reason why, because the market participants are more or less fixed for a given week. They don't change. So they also need to go forth and back from short to long positions. That's the reason we have cycles in traded volume. Yes, they are there. They are not in every asset class. So you might think about where it makes sense to use volume-based data. So you need to have knowledge where to use the volume data, where to get it from. But in the end of cycle analysis, I hope you get a clue now how to apply this idea with our cycle scanner we provide to you to your individual market data. Today I just showcased the use case how to do this with the E-Mini contract. That's it for today. I think there's a lot of individual research follow-up, so just Google on this topic. We will find a lot of content, and I think our cycle scanner is one of the first. I don't have any other clue where you can do cycle analysis on volume-based market action. I think that's, again, a key topic we provide here at the foundation. Today it was important to bring this knowledge across to you if you have not heard about it. If you have heard about it, I would like to learn your experiences on volume cycles. Down in the comments, I will have a review and pick it up in our next session. For today, I would say thanks for joining me again for this session and this topic and this idea. And next week, I promise I will be back live here again. Until that, I will review your comments down below. So today, it's even more important that you maybe grab a comment. Like it, subscribe it. Otherwise, we see you again next week. Bye.